Welcome to What You Own and Why You Own It. This quarter, we focus on CN Rail. Established in 1918, CN Rail is a transportation business with an extensive track network across North America. CN's network of approximately 21,000 route miles makes the company the largest track operator on the continent. CN is the only rail network in North America to connect three coasts: the Pacific, the Atlantic, and the Gulf of Mexico. This competitive advantage allows the company to meet the transportation needs of a wide variety of domestic and international customers. It would be incredibly difficult, if not impossible, for a competitor to purchase the land and raise the capital necessary to duplicate CN's rail infrastructure. The next question is, why do we own it? In order to answer the question, we have to look deeper into CN's ability to generate revenues in excess of its operating expenses, costs of maintaining its rail system, and making the necessary investments for future growth. CN has generated over $74 billion in revenue since 1999. The company moves a diversified portfolio of goods, including petroleum and chemicals, grain and fertilizers, coal, metals and minerals, forest products, and automotive. A wide variety of freight and customers has helped CN prosper during good times and bad. Over the same time frame, CN has had over $52 billion in operating expenses. Fuel represents a significant cost of doing business. Railroads are more fuel efficient than their closest competitor, trucking. In fact, in 2007, major railroads in the United States moved a ton of freight an average of 436 miles on 1 gallon of fuel. That's the equivalent of moving a ton of freight from Winnipeg to Moose Jaw on a single gallon of fuel. This represents an 85% improvement in efficiency levels when compared to 1980 fuel efficiency. CN has generated over $21 billion in excess cash. A large portion of that has been reinvested to improve the company's efficiency and generate future revenues. In order to improve speed and reduce bottlenecks, CN has twinned bridges which allows stacking of cars and also added new transfer stations. They also acquired EJ&E Railroad in 2009, which allowed them to bypass the congested metropolitan Chicago area. The acquisition shortened shipping time between Canada and the southern U.S. by up to 18 hours. In the rail business, time is money. But was there money left over for shareholders? CN's management has paid shareholders over $3 billion in dividends from 1999 to September of 2010. The annual dividend payment has increased from $136 million to $474 million. Transportation services are a vital part of any developed economy, and CN Rail is a toll booth on the global economy. Its extensive track network and physical assets are positioned to meet the needs of domestic and international customers for the decades to come. Thank you for joining us. Next quarter on What You Own and Why You Own It, we'll be taking a look at the banking business.